The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 13th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. Just let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific or maybe turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 21 points. She's trading out at 25,199. S&P is down 2780 is the print. NASDAQ 100 down nearly 0.5% or $32 to the downside. Russell 2000 is flat, trading at 1601. The semis are off 6 points. New York Stock Exchange down 5. That's flat. NASDAQ Composite off 26. Trannies are 1% to the upside. That's 109 points, even Steven, as we speak right now. Spot volatility index is basically flat. Trade out at 1583. Gold up $7. Silver up 9 pennies. Leading the charge here to the upside, dollar-wise, it is Alnylam Pharmaceuticals up 5% or $7. Blue Linux Holdings. Blue Linux, probably Blue Linux, up 22%, $6. Allergan up nearly $5. American Woodmark Corp up 4%. That's $4 and change. FedEx up 4. To the downside, Booking Holdings down $22. That's 1%. Google's off $14, 1.25%. Madrigal Pharmaceuticals down 10% or $14. Silicom Limited off $8 or 14%. So certainly there are things moving in both directions out here. The first request came from Kevin, and Kevin said, hey, I'm short the Dow. What do I need to see next to tell me that I'm right on the trade? So if we go take a look at the Dow specifically, let's do this. Let's take a look at this chart here, Kevin. And one of the things that you will note, clearly, we can see the downtrend channel. And price yesterday, price today has hit the upper boundary of that channel. Now, on the channel line, we're just using the body of the candle. Doesn't matter whether it's an open or a close out here. You're looking for 3 contacts, and we certainly have 3 contacts on the upside, so the upper boundary line. So to be correct on this trade, you want to see price stay below that level. Just take, your line, draw it from the high of January 26th. It's pretty much going to be about the open of the 29th. It certainly is going to connect to the February 27th open, as well as yesterday's open, so the body of the candle. If you see a close above that, well, then you may be too early, as price would find resistance right at the February 27th level. So that has to be an area where you would consider, is that worth the risk to have a stop above that area? The high of that session, by the way, inside the Dow, I don't know what how you're short, but basically you're looking at 25,800.35. Now, to the downside, in order to say, yeah, you're on the right side of the trade, you've got to see, or you'd like to see, price close below Stevie's red line. That number as we speak right now, and it will change. It'll be different. It's 111. It'll be different by 115. It'll be different at 4 o'clock. But you can use this as a pretty good guideline or gauge of a guideline. Right now, it's printed out at 25,047. You'd like to see price, especially in the Dow, get below Stevie's red line. And the reason is because if we take a look at the price oscillator, that's the bottom panel of the screen, difference between two exponential moving averages, 19 and 39, it is below zero. So testing and rejecting, which is what the Dow has done thus far, is a short-term bullish. But you're really stuck inside this little trend, this little area here, the top of the descending trend line or channel line, as well as Stevie's red line. So it's more neutral than it is bullish or bearish right now. But it closed below 25, Stevie's red line. Right now it's 25,046 and change out there. That would say you're on the correct side of the trade. And that is my take on the Dow. With regard to the other markets out there, what do we want to take a look at? Well, let's start off by taking a look at interesting day yesterday versus today. We take a look at the spot volatility index. Right now, the S&P flat. You'd pretty much anticipate and expect the spot volatility index to also be flat. And it is. It's up 4 pennies. No big deal. And this holds true for you too, Kevin, as well as others out there. What is it you want to see in order to remain bullish? And then the opposite will be, what do you want to see to remain bearish? And with regard to the spot volatility index, the number to write down on your pad of paper today is 1697. If the spot volatility index were to close above that level, that would be then short-term bearish for the S&P 500. I will then assume at that stage we will either see price resting at or closing below Stevie's red line inside of the Dow out there. But that's what you really need to see in order for things to get grooving to the downside. Now, with regard to today's activity inside the NASDAQ and inside the NASDAQ composite, you can see that the session, in this case here, the composite panel number 2, has exceeded both the high and low of yesterday. We've got, if this closes down 1 tick, it's possible we could say that this is a key reversal day. The reason why I hesitate just slightly is in order for that to occur, you have to have a market in an extended condition. And I don't know that I can really call the NASDAQ composite or the Dow in an extended condition. Just because it's over its highs does not mean that it is extended. It just doesn't. But what you really need to see, Kevin, and those of you that are, short or looking to get short inside the market, those of you that are bulls, what you're looking for is the spot volatility index to stay below the 50-day exponential moving average. That's 1696 out there. So when we come back from this first break, we'll check to see what requests are out there. Maybe we'll go take a look at Goldilocks and silver. I see Bob in Spokane wants to take a look at light sweet crude. And if Bob wants to do that, well, then so do you and I. So we get back from this break. Let's go take a look at its market profiles out there on the 60, the 240, the daily, and the weekly time frame charts. And we'll see what other goodies we can throw into our Easter basket. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if you are watching us on Tiger TV, we're taking a look at the chart. This is Stevie's synthetic chart for light sweet crude, and that way it stitches all of the contracts together in a nice way where it provides some very usable TAS market profiles. I believe the active contract is May right now, Bob, but I would need somebody to second that. But regardless, at this stage here, with regard to the charts that we're taking a look at, I don't have to worry about that. And what this says, you say you're short from 61.95. We're trading somewhere around 60.70 now, give or take a few pennies out there. And I would focus first on the right-hand panel, which is the weekly time frame chart. And we can see that the bottom of its box is $60.59. So that is a level of support or potential support. You're short. You would like to see then gold, not gold, light sweet crude. Well, that's black. That's Texas tea. But you would like to see a close below 60.59. That's taking a look at it. When we look at the daily chart, so that's going to be your second panel from the right-hand side, you'll see at about the 60.10 area is the center line of its daily box. That's the area where both buyers and sellers believe there's fair value in light sweet crude. So you're trading down to, on a weekly, a level of support. On the daily, a place where the buyers and sellers believe there's value. So you're kind of trudging through a difficult spot. At least that's what it appears when we utilize our market profiles. In my opinion, that's the meaning there. So just keep your stops tight. Doesn't mean you have to exit, but if you want to understand where the battle lines are drawn or why price keeps nudging up in that general vicinity and isn't busting out to the downside, well, there you go, as Gus would say, in my big fat Greek wedding. Now, if we take a look at light sweet crude on my other set of charts out here, my apology, because I only have the continuous contract or the January contract. That's not going to do you or I any good. But I believe if I were to put May out here, it would look pretty similar. And by similar, what I mean is that the price oscillator is down at the zero line. Now, this bodes well for you with regard to today's price action and being short. And would then say, you know, tighten up your stop. because what you've seen is price run into Stevie's red line. Quite frankly, one today, yesterday, the day before, 2 days before that, out there, a couple days before that, and that is a resistance zone. But the more important time period and time frame, in essence, is today. And the reason is we're down at zero. So you've had your anticipated test that you would expect with regard to when the price oscillator gets down to the zero line, a test of Stevie's red line. Now that there's been a rejection, we should see over the course of the next few days, as long as price stays below Stevie's red line, 61.82 right now, you then could get to a falling price oscillator below zero. That would be bearish. Now, what that would mean, and you're already a bear out here, that would then say the price is going to come down and test the swing point from February the 14th out there, the low. Doesn't tell us whether we'll break it at 58.20, but says that that's where price will go ahead, or should at least head down to. So, Bob, I hope that that helps you out with regard to light, sweet crude and what it is that we're looking at. And because I know you asked the question, you said, Steve, but what happens if price closes above your red line? Well, if it closes above the red line, you would be turning your price oscillator up just slightly above zero. And that would then say you're going to go run back into the highs likely of February 26, test those. It could be an A to B equals CD to the upside. In essence, it would say if you close above Stevie's red line, more likely than not, you're on the wrong side of the trade out there at the present time for light sweet crude. Well, let me just restate that. At the present time for light sweet crude, I think you're on the right side of the trade. But don't let light sweet crude close above Stevie's red line today or mañana. Okay, let's go take a look at, let's see, what else do we have out there? And you're welcome. We've got EEM from Tarpon 2. So let's go take a look at EEM. I believe that is one of the emerging markets ETFs out here. And, of course, you know, we need to know what the underlying instruments are, what this thing is invested in, which countries, this, that, and the other. But if we just did, I don't have the time to do that. And if we were to take a look at the EEM and just simply its market profiles, Tarpon, here's what we would say. Here's what Stevie would at least say. And take a look at the daily. Right now, it remains bullish as long as there's a close above the top of its box, which is 49.69, and you're trading at 49.69. This would say it would have more room to run to the upside. Well, if it's able to do that, then that room to the upside would say just about $50.80, and that's the top of the weekly profile. Longer term, the monthly chart looks pretty good, looks pretty strong for the EEM. Now, what happens if you close below 49.69? I mean, right this second, you're 49.67. Hey, this is an end of the day number that I give you with regard to those boxes. It looks a little bit like the NASDAQ in essence, right? Kind of key reversal-ish. We'll just call it an outside day because this is not an extended market. So it's just an outside day. It's just a bearish engulfing candle out here. It's a bearish engulfing candle on a daily chart, really right around the resistance zone. You say, what do you mean the resistance zone? I say the gap, because gaps are your friends, whether you're a bull or a bear, because what they do is they provide us with support or resistance levels. So, Tarpon, the issue you've got here right now is there was a gap to the downside on February the 2nd. That was with 116 million shares. The first time to the upside was February 26, 51 million shares. Today you're at 27. That's going to be likely less than 51 million shares. You've got a bearish reversal signal right around an area where you had a previous bearish reversal signal, the gap to the downside 50-30. This says, you know, are you in it? Is my question to you, Tarpon. Are you in it? EEM for long play, 2 to 3 months. Well, then, if you're looking for a long play because you're not in it, then I would wait for a pullback, and I'd look to buy the next pullback. And maybe today is a signal of just such a situation. Now, I don't know where we're at with regard to Stevie's red line on this on a daily basis out here. And we probably should be looking more like at the weekly charts. But you're above zero. You're at 49.69. 49.15 might be a buy point. And when I say might be a buy point, well, you've got a gap. Hey, look, if a gap to the downside was resistance, you've got a gap to the upside. And that's at the 48.84 level. So if price is pulling back, doing less than 58 million shares, you're around this 48.84, 49.15 level, then I'd say you could go ahead and fire away. But you might be able to get it for less than that. That's right. You might be able to get it along with a stick-free pan right around $47.36 out there. So that's on the EEM, the Emerging Markets ETF, struggling to get through a very clear level of PS day resistance. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. That's the way we like to see it out here. We've got several requests lined up for you. So for your viewing pleasure, we're going to first start in and take a look at Square. The ticker symbol there is SQ. And in the case of SQ, let's see, who asked for this one? This is SNP. So SNP, he's looking for a buy point. Says closed along yesterday, looking to re-enter at some point. So if we take a look at Square, I'm going to first put this chart up here. I'm going to put my my Ninja Trader chart up here. And you exited yesterday when you had a Tom DeMark 13 combo account out there. I don't know if you knew that, but oftentimes that can be a level where Square, believe it or not, makes a change in trend. You could say, Steve-O, how can you say that? Oh, I just said that for you. Well, the last time that Square actually made any kind of top of significance out here was the last time that Square made one of those TD 13 combo counts. That was on November 23rd. And then price went ahead and declined from around the $49 area, sort of where you're trading now, all the way down to the $34 arena. Will that happen this time? I don't know. But I think you're out at the right time. Not necessarily based upon that, but if we can use that as a, okay, one little ringy-dingy, so that's one check mark out there. Today looks like it's check mark number 2. Check mark number 2 says you've made today and yesterday a 1 to 1.272 lightning bolt, A to B equals CD pattern. But today, you're actually, at least as of 132, you have the bearish reversal signal. You have a bearish engulfing candle. That says, okay, time out. Now, what's price going to do from here? I don't know, because at this stage here, all it did today was came back and tested Stevie's red line. 50.82. It looks like it was a test almost to the exact penny out here. It doesn't matter whether it was to the penny or not. It was 50.76 out there. What we know is it tested Stevie's red line. Now, S&P, this is actually kind of neutral. I can find 2 bearish patterns, but I can also find when you have a bearish pattern, the first thing you're going to do is go back to support. Support is Stevie's red line. It still has a rising price oscillator above 0. Look, let's assume that the completion of the A to B equals CD pattern sticks. Let's assume that the TD combo 13 count is going to stick. Then you're going to see a close below Stevie's red line. That's the first thing you're looking for. 50.82 as we speak. If we get that, where do you head back to next? Well, at this stage, we're going to have to say 45.82. It's like something was flying through the air as I was breathing, and boom, hits the throat. Not very good. I might have to go try one of those little teaspoons of honey again during the next breakout there. Boy, did that make it easy yesterday. In any event, right now, with regard to Square, the only thing you and I really have to go on with regard to where could it pull back to would be, here's the question. Does old resistance become new support? And the level then that you and I would be looking at is 47.40. Because, see, that was old resistance. Remember how gaps are our friends? That was a window that did get repaired, and in a big way, back on March the 5th when it had a wide-ranging bar, accelerating volume, 30.6 million shares out there. But that's 47.40 was created by the gap to the downside on November 27th. So I would say look for that as your next area. And price or volume ought to be less than 30 million shares as it's pulling back to that area. So I will say congrats on the trade. Congrats on getting out at what looks like the proper time, but you won't know that for sure until you see a close below Stevie's red line. And right now that's 50.84. See how that number is going to change as price is moving up and down. But you've got the picture out there. So I hope that helps you out. SNP. We had a request from the Peak man himself, and Peak wanted to take a look at AVH. So let's go take a look at AVH. Let's first go figure out what is AVH. That is Avianca Holdings. AVH. Is Avianca Holdings, is that an airline out there? I don't know what it is, or it isn't. But what it is today is trading out at $9.05. Now, you want to ask for my reading on Avianca Holdings out here. So yeah, it is an airline. Hey, how do you like that, Pete? That was a 50-50 crapshoot out there. It was either airlines or something else, right? So if we take a look at Long-term bull on square. Okay, cool. No, that's cool. And if you're long-term, and you're going back to that square issue out there, then I'd really have to be looking at the weekly chart, or the monthly chart to give you. But it looks like it's going to pull back. Hey, back to Avianca, if I said that correctly, holdings. Here's what we know about today. Today really ran into a wall of resistance, just simply looking at the daily chart out here. Brand new daily profile formed yesterday. Bullish structured profile. We say bullish structure because the center line at 871, much closer to the bottom, 863 versus the top 923. Now, price got well above 923. You're trading at 904 right now. It happens to be also a brand new weekly profile, which is a bearish structured box out here. And 917 is the top and 877. So you got to just say, well, what does that all mean then? What do we do here? And I don't know what you're doing with regard to Avianca Airlines, but it looks like, just in looking at this chart alone, based on its market profiles, that price ought to pull back. That pullback area, if you're looking to get in on this, you are long and strong. The pullback area, are you prepared for this to pull back to 863? Must be, because if you're long and strong, it was just down there just a few days ago. So no problem. I would anticipate that what this is going to do is pull back into the 799, the bottom of the weekly box, to 863, the bottom of the daily profile. Which one is it going to be? I don't know. But if we take a look at the Ninja Trader chart out here, this is showing us that if price closes below Stevie's red line, which is about 905, and really you don't even need that. Forget about my red line. Now, I don't often say that. I just mean that from the standpoint, just look at where the sellers are hanging out here. Peek. You know where the snipers are, right? You don't need me to tell you. All you have to do is look at the shooting star, right, the opposite of the hammer, from February 22nd. You just have to look at the bearish engulfing candle on February 28th. You just have to look at the bearish engulfing candle on March the 2nd. And now today could be another shooting star. We don't know until the end of the day, but there are a lot of snipers hanging out in this 940, 50, 60 level. So you may be long and strong. I just want you to know you've got a lot of counterparts that are firing away at you. But maybe you've been in this for a long period of time, and you're just simply going to overtake them. Like Wonder Woman, like Zeus. Steve Rhodes with TFNN. I'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the next question that has come in is not on my cell phone. I didn't think that it was. But the next question is for some additional assistance on the Dow Jones Industrial, just to really kind of take it apart. The question, if I read it correctly, is this decline, Monday and Tuesday, likely the final decline within a correction pattern? And therefore, sending the Dow back up to the 26,610 level out here. So hopefully I have properly paraphrased the question. So is today the final day of the correction inside of the Dow? And how are we going to answer that? We're going to answer it. Which we took a look at the Dow just a little bit earlier. And so what I want to do is I want to go ahead, I'm going to put up the Dow Equity Futures contract. So when we took a look at the Dow at the opening, that was for Kevin, who was short the Dow. And we were showing how the Dow, in essence, has been trading within a range, making it effectively today neutral. So neutral, from the standpoint of you've got resistance at the descending trend line or channel line. In this case here, I'm just showing the trend line. And if price were to close above that, then I would say, no, not final day today, but this move, the final leg. Well, either way, there's a couple of things that must happen with regard to the Dow to give you the next bullish or bearish message. And I'm just simply going to switch over into the equity futures contract because then you and I can also go take a look at some market profiles out there. And that will perhaps assist everybody, depending on the time frame it is that they're looking from a trade standpoint. And what we're looking at here is resistance is clearly the descending channel or trend line, whichever way it is you want to draw it. But there's also support, and there's a key support level here, and that is Stevie's red line. Trading above Stevie's red line means that the very bottom panel is rising, and that bottom panel is that price oscillator. Now, when you get to the zero area, that's where you really learn whether the move is bullish or bearish. And at this stage here, right now, it is short-term bullish. But when you say something is bullish, that means you have to go look to say, okay, where's my resistance area? And in this case here, that resistance is so clear with it being this descending channel line or trend line, whichever one it is that you want to go ahead and draw. If price is able to close above that, well, then the bearishness starts to go away because price will then stay above Stevie's red line. You will have a rising price oscillator above zero. If you were ever going to look for a place to get long and strong, a stock a commodity, an indice, or whatever it is that you might be trading out there, you want to do it around that zero line. That doesn't mean you can't have false breakouts. But what it does mean is when there is a false breakout, you know exactly which action to take to either side. And you, by the way, you take that action all the time by getting in and out of a trade, by keeping your losses small, letting your winners try to run. So you do that all the time. And right now, with regard to the Dow specifically, whether it's cash indice or it's the equity futures contract, and because of the way you trade, you want to really more focus on the equity futures contract because you can make some decisions in the evening and so forth. So right now, it's really more of kind of a neutral stance. Kevin, I hope you are hearing me say that too. Doesn't mean that you're being short. The Dow is the wrong move. Just don't let it close above that descending trend or channel line. And what you really want to see is a close below Stevie's red line. On the equity futures contract is 25.063. Closing below that then says you have a falling price oscillator below zero. That is bearish. What does bearish mean? You have to go to your next level of support. Where's the next level of support inside the Dow Equity Futures contract? Very simple. It is simply the low of this session here, the low of March 2nd. Why? Because the last time that the cavalry or the bulls came in was when they formed that bullish engulfing candle March 5th. That means support, in theory and in practice, is the low of the two sessions out here. Well, that would be the prior day. So that says your target to the downside would be about 24,197. If I give you the exact number, it is 24,204. Yeah, so use the exact number. What happens if you close below that? Well, then you're trading inside that February 6th candle session, and you're going to go test that low more likely than not. Where's that low? This is downside. 23,088. Because, yes, if you close above that descending trend line, even though you didn't mean to say it, you're going to go back and you're going to test the highs, most likely. Now, I say highs, but really the Dow Equity Futures contract has to get over the February 27th level, the last time we saw a bearish reversal signal, that little dark cloud cover out there. And I'm not being wishy-washy here. These are the things that you and I have to have our eyes glued upon and recognize when one area fails, where's price headed to out here. And so this is actually kind of the coolest time for you to be either neutral and waiting for the Dow to give you a piece of information, because it is, for all intents and purposes, and I know we've asked where did that one come from before, but for all intents and purposes, I think it was not too long ago, just like a few days, but for all intents and purposes out here, that you're going to get a release of information over the next couple of days because you got a small range out here. Remember, the Dow has basically over the last 10 days has had a 400-point trading range. We haven't done a 400-point trading range today. So you're going to get some information released to you, I would think, soon. Now, that was a lot of information, was it not? If we look at what right now at 148, even though it's 30 stocks, it is the trophy horse for the big dollars out there. That being the Dow, the advanced decline oscillator, bottom panel on my screen, is just slightly below zero. That would be one check mark for the bears. I don't know where this is going to end the day's trading session, but as a 149, that is one check mark for the bears. If we go take a look at the equity futures contract, what is that providing us with? Well, it takes a look and it says, okay, if price is able to close below, and it's trading right at it right now, close below 25,200, you're 25,190, close enough. Then that says, phew, okay, then I head to 25,033, center line of the daily profile, which that profile is equal. It's fairly balanced. There's buyers that are sitting at 25,033. You can say, how do you know? I know. So do you, because all we have to do is just look at that screen out there. So what you need to do, or what you need to see, is price get below 25,033. And if it does, then you're looking at a move down to 24,389. 24,389. That is what you would be looking for to the downside. And if things are really bearish, and that's what you're looking for, Mr. Z, you will see 24,389 get busted out. And then that says you head back to that February 8th or 9th, which day was it here? February 6th low inside of the Dow equity futures contract. So there's going to be a bunch of information released to us soon. Those polar bear were the equity futures prices that we were just looking at. Because I've got the daily, the 240, the 120, the 60, the weekly out here. That's what we'll be looking for in the equity futures contract. That is YM. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question appears to be for the day. Brian writes in and says, Steve, I have a confirmed A to B equals CD structure in the Russell 2000, the IWM specifically. Do you think that it will complete that pattern? So let's go take a look at it. And when Brian used the terminology, a confirmed A to B equals CD, the way that I would use it, and I'll assume it's the same way that Brian is, we would take a look at our B point, which in this case here, for me, the way I look at it is the February 27th level. The A point was at 142.50. That was down on February 9th. That B point had volume of 18 million shares. It was confirmed when it was passed with wide price spread accelerated volume on March 7th with 22 million shares. And that would give you a 1-to-1 price projection of 161.76. Makes a lot of sense, especially with the all-time swing point high being at 160.63. Now, today's high was 160.30. That's the 1-to-1. The 1-to-1.272 is at 165.40. But, there's a couple of buts here. We can't trade just based upon the information coming from the IWM. You can. I'm just suggesting that you don't, because there's more information out here than meets the eye. What do I mean? Well, what I mean is we just simply go take a look at the profiles for the Russell 2000. And when I switch over to these, now there is a 10-minute delay on it. And when we take a look, what I consider to be the most important chart here right now for you, Brian, in the Russell 2000 is the daily equity futures contract. The top of that box, just for blanks and giggles, is 1612.80. And the high today is 1611.30. You have run smack dab into resistance, let alone the IWM is trading into a swing point with light volume. If you're long this thing, tighten up your stop, because you've just run into a wall. Doesn't mean you can't take out that wall, but it's a wall. Might be time to take some of those profits. Steve Rhodes with TFNN. Have a great Tuesday. Stick around. You've got your favorite polar bear, David White. He's up next. Tom from 3 to 5. Andy Heck from 5 to 6. I'll be back with you tomorrow. From Rhodes. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.